Hello traders, this is Igor from FX Igor YouTube channel, and today I will talk about retest support or resistance price levels strategy that I apply very often in trading, especially in swing trade. So if you go and choose retest algo alpha, breakout and retest signals algo alpha, and choose the asset that's called 6B, which means British Pound futures, to get the real volumes, you will get something this. So as you know, the CFD market, we don't know the real volumes, but using the futures market for the same asset and the same price, we can see the real volumes, which can be very beneficial. So how this strategy works. The first part of this strategy is that you find some market structure. So for example, this is the bullish market structure. After the bullish market structure, usually we will have some kind of retracement. So if this high or this low, what I'm looking for is to see at least 38.2% Fibonacci retracement. So in this case, my 38.2 Fibonacci retracement will be around level 1.34. When you do that, what you're looking for is to see some retest moment, and voila. The indicator, breakout and retest that I just put on the chart will draw you exactly the resistance, now support, price level, and the green, which means buy, and delta flow, which is positive, to show that there's more buyers than sellers in the market on that price level. Usually, the indicator for this moment to enter into the trade is this kind of the huge wick. If you see the wick like this on this red candle, this is the signal that you can enter into the trade. When we enter into the trade, we will have one bearish small move, and after that you see two big bullish candles, and after that till today we made more than 150 pips. But this is not all, because now you have a couple of former resistance, now supports. We will have another ability to enter into the trade. The same story, only a couple days after. Again, delta flow is a strong buying potential. We have a bullish candles, and finally, if you miss these two opportunities, you will have another opportunities with this strong wick here. This is the bearish candle, but there is a strong wick, which means that price push market a little bit upside, and here you can enter into the trade and achieve around 60 pips profit. So as you can see, using this indicator and the logic of the market high and low, where first you find a high, then you wait for the retracement and try to buy after the pullback. This indicator just shows you the right moment to enter into the trade after the pullback. As you can see, sometimes our bullish market structure will be short time lived, for example several candles, and sometimes will hold much longer. However, sometimes you will have a false signal like this. What's happened here? The problem here is that we have a bullish potential and bullish bias, and when you have a bullish bias, to make a sell order there's no any sense. So in this case I will never enter into the trade. What you like to see is this new high, then after retracement to find a put to buy. The best thing is, if you see that overall market structure bullish, always try to buy. If you see the overall market structure is bearish, always try to sell, and this is the simplest one. Now we can go to the different assets. I will go to the S&P 500. The same situation. We had a strong push upside here between 2 days, May 8 and May 9. We have the gap. You can feel that gap and draw a line, horizontal line, whenever you see the gap. Now price is starting to go up, 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 and we find the new high almost in $6,000. What's happened here is that price started down. There will be correction, and now for a couple days we reach, believe or not, just on the price where we're the gap. The good thing is this indicator will plot you the buy signal, show you the candle, the bullish candle, the wick and everything, and show the market flow, which is bullish, so you can enter in that trade and keep that trade a longer time. Especially if you have the buy trade, you can hold a little bit longer, because the indices and the market with stocks, usually stocks and indices are more long than bearish, and you will have more bullish days than bearish days. So you can use that to hold your trades a little bit long. Sometimes you can apply this strategy without a larger pullback. For example, you can draw a trend line when you find a strong market structure. For example, this is the euro dollar. I open in the futures market. So if you find the low, you can draw here this kind of the trend line. So on the relative strength index indicator and on the chart, you see the clear bullish trend. Now, what you want to do is you waiting to see any buy signal in a buy structure to enter into the trade. And here we retest the former resistance now, the former support now resistance, and because of that we can enter in this trade here. And as you can see, after several days, whole week, we can hold a bullish trade and close in some. For this kind of strategy, the biggest problem is where should I close my trade? How to find the target? And what you're looking usually is find some strong resistance. However, it's not so easy. You need to be ready to wait. If you see the price sometimes going a different direction, you need to close your trade earlier. So the biggest problem in trading is to find the right trade, but the more complicated is to close in the right time, to close and to figure out where should be the target. One of the ways to find the best target is to use the volume profile. I will show you just on this chart. So you can go to the indicator section and type delta flow profile, and you can use delta flow profile by looks out. If you go and analyze this volume profile, you will realize that these price levels here with a bigger seller potential is excellent for the target, and this point of control is excellent for target. This red line usually shows the places with a strong volume, with a lot of volume, and price usually try to reach the levels with a high volume, sometimes multiple times. This high volume is because the price oscillates in that zone too often, so there will be a lot of buying and selling pressure. So look this red line here at price near to 1.14 is beautiful for target, and as you can see here, this price was excellent to close the trade. Look this, how many times this price level was retested or price even today we are very close to this price level. So one of the tricks is to use the high volume profile for targets and low volume profiles to enter into the trade, usually on some support, resistance, or on very low volume profile. So this is my tricks that I use every single day. If you have any question, you can ask me. I wish you a great day and bye bye.